Hello, ladies and gentlemen. Welcome to New York Life Nylis introduction. I am Srinivas Nikam. They call me Nick. Today we're going to look at how to use the Nylis for illustration. Click on Workplace. There you see illustration Nylis. That is going to bring us to this particular screen. Let's look at some of the common tabs here. Here is the Home. We can enter a new case for illustration. Let's say you have a client 40 years old who is trying to buy some life insurance. Then we're going to click on that. We'll come to that. Then we're going to be looking at calculations. Then we have create illustration here. We can use preferences depending upon what we want to enter. You can just go through this one. Whether line of business, life, particularly the state has to be put in, is something we don't use. Producer profile is you as the agent, and you can enter all your information so that it is reflected on the printed copy of the policy. So let's look at here. We can select by product, by sales concept, by template. So we're going to just look at life insurance. Life insurance here. Let's click on life insurance, and when we click on life insurance, it's going to show all the different types of life insurances that are available from New York Life. On the other hand, if you click on annuities, it lists all the different kinds of annuities ranging from future mutual income annuity, guaranteed financial income annuity, and the list goes on all the way. And if you click on long-term care, you're going to see two main categories which are like term insurance, namely Nile Secure Care and Nile My Care. There's another type of long-term care insurance which is listed under life because it's part life insurance and part long-term care. Here are two options available: Asset Flex 120, Asset Flex AD 119. Let us start with a life insurance standard for Texas, and we want to do a level premium term insurance. Let's look at the term insurance, and as soon as I click that one, and it is showing up more tabs here, namely this is the one we picked, term life insurance AD 118, and this is where we press the button to illustrate after we have entered all the basic information. We can also print this one so that we can look at the whole report in a more detailed manner. So let us pick an adult, age 35 years, non-smoker. We can put in the gender. Come here, the tax bracket is not of that significance at this time. And when we come to the policy, we have to say level term for 10 years, and the maximum we can go is up to 20 years. Let's see, we get a insurance policy for $1 million. Of course, we can come here and add riders. As we can see, it has a disability waiver of premium. If a person gets disabled, if it lasts for more than 6 months or so, then the premium would be waived. We can put that one. Accidental death benefit will give you twice the amount, and if you click on that, we can see what happens here. You can see the premium goes up by almost 50%. So that's not something you really want to recommend. Yearly convertible policy is something which let's look at and see what happens. Yearly convertible policy is $1,217. You don't need that one. A level premium convertible term. This is what we have. We should be able to convert this into a whole life insurance if we need to in the future. We also have policy purchase option, which can be used to purchase additional amounts of insurance. So let's click this one off. And the children's, you can include your children also in the calculation. Anyway, let's go back here. And so we say 20 level premium, or if you just make it yearly convertible, obviously the premium is going to be pretty significantly different, $460. But at the same time, when you realize that every year the premium is going up, when you add up the premium for 20 years, it will probably be more when you use yearly convertible term versus level premium convertible term for 10 or 20 periods. Keeping that in mind, let's change this over to 20 years. Once we have entered all the basic information, we're going to click on illustrate. Here it shows starting at age 36, you're paying at $1,217 and the premium remains fixed for 20 years. But look at what the premium is going to be on age 56. It jumps from 1200 to 1300 plus. That's 10 times more. And this is where the value of whole life insurance comes into picture. Because if you look at the cumulative, let's look at the cumulative premium that we are paying. All right, we are for the age 56, we are paying a cumulative premium of $37,000. But by the time you are 65, you're paid almost $219,880. If you keep that in mind, for the same amount of money, if you get a whole life insurance, it will be paid off in like 10 to 15 yearly premiums. After that, you don't have to give any more premiums. That's number one. Number two, there is cash accumulation with tax deferral. Also, you have a significant life insurance for as long as you're alive. So that's one way to do it. We can print this one, and let's go ahead and create a print. Here is the 7-page report, which is very simple for a life insurance. Here is a New York Life Insurance, the agent's name, the phone number, and the date it was created. And here is the valued client basic information, the policy for $1 million with a level term 20 years. And this is what the premium is, non-smoker, preferred rate. And as we go down here, we see summaries, guaranteed benefit, and of course the premium listing, which you can see from 1200 it jumps to 13,000. So that's the basic policy. So this is a basic introduction to illustrating the term life insurance, which would be useful in talking to people about whole life insurance. So let me just quickly bring up whole life insurance. Say we want the whole life insurance, and it lists all these policies that are available. So let's click on whole life insurance. The client's information remains the same as far as the basic data we have entered here. Let's go to basic policy here. Of course, $1 million is going to cost $27,000. That's going to shock most people. So let's start off with the $250,000 premium for like 20 years, which will be going up to age 55. Let's go over and illustrate. Let's look at see the riders, some of the riders here. If you add a disability rider, if you want to, that's an extra premium of about $137. It's something you want to consider. Disability waiver premium, you can consider that, but let's for the time being drop this one. Option to purchase paid up additions, and we also have option to buy extra insurance later on if we need. Says everything is correct, so that's good. It also has a $90,000 long-term care benefit, which I think is worth keeping it. If you want to include your spouse, you can include. Let us go ahead and illustrate this. First of all, look at one thing, and that is the total premium paid for this policy. For 20 years, we paid a premium of $52.56 per year. That approximately comes to $100,000 plus $105,000. Pair that with $219,000 for $1 million insurance that we had. I can actually put both them together for the same policy amount, but the point I am trying to make here is that here you have a cash accumulation, you have a life insurance $250, but you're accumulating cash surrender value of close to $200,000, plus you have a life insurance for as long as you're alive. These are some of the basic things to get started. I hope this has been helpful to you, and thank you so much for watching this presentation.